What's up, traders, and welcome to today's FOMC prep, where in this video I'm going to share with you guys how as traders you want to adapt to the potential scenarios or the information that's going to be released during tomorrow's FOMC. So let's go ahead and get right into this video. Now we can see that most likely Fed is going to keep the rates unchanged. That rate decision is at 2 p.m., which is on May 1st, 2024. And if they do leave the rates unchanged, you're most likely not going to see the strongest impact during that time. But that puts the focus on Jerome Powell itself. That puts the focus on what tone he might bring. Is he going to be more hawkish? Is he going to be more dovish, right? So depending on that message that he brings, that's where us as traders, we're going to see the impacts on price, and that's how we're going to look to adapt. So before we look into the market impacts, we want to take a look at the fact that inflation this year has actually been rising. So that gives us a signal as traders to have maybe a more hawkish Fed. So as you're going to see in the charts at the end of this video, again, that information of a potential hawkish Fed is already most likely getting priced in. So we're going to most likely need a very hawkish Fed for us to continue seeing that meltdown on gold. So let's go ahead and take a look at the market impacts, and then we're going to take a look at the charts just after this to be able to see how the charts have actually been moving itself. So as you can see, if we do get a hawkish Fed, what this is going to bring is most likely that will cause gold to continue down. But you might be asking yourself, how do I know if the Fed is hawkish, or how do I know if they're dovish? If you have a hawkish Fed, you're going to see them talking about inflation still being high, and you're going to see them talking about not really giving any dates on when they're going to do rate cuts, or them saying we're not going to be looking to do any rate cuts anytime soon. If they bring that tone to the speech, then you should see dollar climbing and continuing its rally, and you should see gold continue lower. Now, when you're looking at a dovish Fed, it's really just vice versa. So you would have weakness in dollar, because if you're going to have, let's say, for example, the Fed talking about, you know what, we're going to look to cut rates maybe this summer, or we're going to be cutting them by the end of this year. Inflation has been coming down. If they bring that message, which is, again, vice versa to the hawkish, you're going to see downside moves on dollar. And if you do see downside moves on dollar, markets will react to this, and they're going to respond to this, obviously. So any pair that you might have against the dollar is going to rally. So you have stock markets rallying. You'll have the gold markets rally. You'll have other currencies against the dollar most likely turn more bullish against that weaker dollar that you could get if you get that dovish Fed. And then, of course, the neutral Fed is going to be them kind of giving signals both ways, not really giving like any strong signals as to when they'll cut rates or anything like that at all. Like, they're not really picking a side. When you see them just kind of like going back and forth, then you most likely just get indecision, and then the focus will shift to most likely this Friday's NFP. So let's go ahead and take a look at the charts and see what they actually look like. So as you can see, this is why we've been saying that this downside moves on gold is most likely the market's pricing in the potential for us to see a hawkish Fed. So that's why, for me, I believe that we could, not that we could, but we should see continued downside move on gold if we actually do get that hawkish Fed. But in terms of price action, let's see overall with structure wise, how are we going to actually continue with this trend? So I would say, as long as price action, let's just say this is how price action looks during tomorrow's FOMC meeting, right? I would say that as long as price action is respecting these highs over here, where price action broke above and turned into support, and it kind of, I would say here, it sort of respected it, although it did break below. You can see that it kind of just made a pause, and then it did rally above, again, this price point of interest. So I would say, even if price action is to do these deeper pullbacks into this area, I think this bearish downside move that we're seeing here on the intraday timeframes, it should continue to extend towards the downside, again, with a more hawkish Fed. All right, we're gonna need a hawkish Fed, and we're gonna need these price points to start getting respected. All right, and we obviously will look for continued trades below these zones, again, with us seeing a hawkish Fed, and we want to see dollar continuing above these highs over here that it's had some trouble crossing above. And as you can see, just kind of like going into this new range for us to be reaching into, at least, like, let's just say, for example, these highs over here, kind of like 106.500 more or less. That's what we should see. Again, with a hawkish Fed, we should see dollar continuing towards the upside, we should see gold continue towards the downside. If it's the opposite, if it's a dovish Fed, then of course you're just going to want to adapt to that, and you're most likely going to see gold start to correct this move, and I would start following those bullish moves. Again, with us seeing a dovish Fed, we would see dollars start to most likely melt off of these highs, and we would see gold start to correct after bouncing from some of these zones over here, as you can see towards the left. So it would really look like something like this. If price action, I would want price action to be breaking above and just start extending right back up towards the upside. And I would say as long as price action, even if it pulls into this area, but with a with a dovish Fed, I would say that price action on gold could continue towards those highs. Again, it all depends on the information that we get tomorrow. All right, so hopefully you guys understood and enjoyed this video, and I just wanted to let you guys know as well that if you take a look at the links in the description, that's going to be the links for my free Telegram, and you're also going to see the link for our private community where we do live sessions every single day, Monday through Friday, from 8 a.m. to around 10 a.m. and as well as some market breakdowns, and of course we have educational content in there. So if you want to join us and you want to see how we trade the financial markets using all of this fundamental information, then feel free to check us out again in the links below. So take care guys, and I will see you guys in the next video.